Welcome investors to Joe's Investment Express. Listen, I've made about 125 videos, and this is probably, I don't know, in the top 3 most important videos I've made. So I never say this, but I really encourage you to watch the whole video. I think it will really improve your investing performance, especially right now in this difficult market. I'm going to talk today about the difference between a hard penny and an easy dollar stock market. And I'm going to show you the differences, and more importantly, I'm going to show you how to adjust your trading for each type of market. And then I'm going to show you 3 or 4 charts illustrating what I am talking about. Please remember, before I begin, this is not financial advice. This is just for education, hopefully for a little bit of entertainment too. Goodness knows we need it right now. Now, these are not my ideas. For the most part, this is a conglomeration of years of instruction from this man, Mark Minervini, 2-time U.S. investing champion. In my opinion, the best living technical stock trader. I should do a video on him soon, but I can't right now. So here we go. First of all, where the heck are we? I believe that we are in a volatile market bottoming process, a multi-month process. As you know, the market broke out on March 17th and it went up, and now it's coming down. It's bottoming. We are transitioning from a hard penny environment to an easy dollar environment, although primarily we are still in hard penny right now. So let me define each type of market. Here we go. Let's see, hard penny. So here's what stocks do during a hard penny environment. Stocks set up in bases and break out from retail buying from small investors like you and me and your Uncle Larry and your Aunt Thelma. And then they suffer breakout failures as institutions and swing traders sell into that breakout strength. The breakouts generally last 1 to 3 days, and then they pull back hard, sometimes just to the pivot point, but often more than 10%, shaking most investors out. Sometimes down to the 50 days, sometimes all the way to the bottom or beneath the bottom of the pattern. Before breaking out, stocks often experience wicked shakeouts. These are 1 to 2 wide-ranging days of over 5 to 10%, again, shaking out most disciplined traders. And they're subject to Hardaway crossovers. Tim Hardaway, famous basketball player, famous for his fake out move. Well, that's what these stocks often do. They suddenly break down for a few hours and shake everybody out, and then they take off again. Breakouts are often in lower volume, and the breakout squats intraday. It does like a 4 or 5 or 6% move, and then by the end of the day, it's down to 3% or 2%, or maybe failed entirely. As far as general stocks, the high PE ratio market darlings sell off and or show massive volatility despite having fantastic fundamentals. And the cyclical and, quote, defensive stocks do well, but unfortunately they are really hard to hold on to due to volatility and false breakouts, as mentioned above. Even seasoned traders get discouraged and begin doubting themselves and wondering if they can ever make a living or even make some money in the stock market. Tell you what, I've been trading since 1996, and there have been plenty of days this year where I have been quite discouraged. But we're not giving up. The best is yet to come. Now, an easy dollar environment, and I would consider 2020, post-April 2020, a very easy dollar environment for perspective. And it's pretty much the opposite. Breakouts extend for multiple days as institutions load up day after day after day, and the stocks do not pull back to their pivot point, and they don't shake people out with tight stops. Stocks form and break out of bases that are very textbook, right? You have a cup, you have a handle, it breaks out, it follows through, and away it goes. Breakout volume is high. The candle on the breakout day closes near the high of the day, if not the very high of the day. High PE ratio stocks just keep going higher and higher. despite increasingly nosebleed valuations. We definitely saw that in 2020, right? With Tesla and Zoom and some of those. Tech stocks and high growth stocks do really well in an easy dollar environment, and they stay above their 50-day exponential moving averages, making them really easy to hold on to. And everybody, from experienced traders to the rookiest rookie, thinks stock trading is easy. I'm going to be able to quit my job pretty soon and buy my boat. So, what do you do in a hard penny environment? And like I said, this is really where we're still at today. We're slowly moving into easy dollar, but I still feel like we are hard penny for the most part. The easiest thing to do is don't trade. If you don't have to support yourself on your trading, probably the easiest thing and maybe the most lucrative thing is to just not trade at all and keep building up savings and get ready for a hard penny to start. But maybe you can't because you have to make money off of investing to support your income, or you are just an addict, and there's no shame in that. If you have to trade every day, you have to trade every day. It's okay. I feel you. So one thing you can do is you can buy pre-breakout while the stock's working up the right side of the base from a low cheat, a handle within the pattern. And then when it breaks out, you sell half or a third or all of your position in the morning of the breakout. And then you can either take your quick profit or give yourself a cushion when it pulls back, which they seem to be doing probably 75% of the time. Or you can just wait for that pullback, but realize the best leaders are not going to pull back, and you are going to miss those. I could show you a handful of stocks this year that have not pulled back and have made huge gains. So that's not a foolproof strategy, but that is a way to minimize your risk. Tight stops. A lot of people think, well, the market's really volatile, I got to increase my stops. That is how you get cut up, and that is how you drain your account. You need tighter stocks when the market is performing volatilely, and realize you are going to get stopped out more than 50% of the time, maybe 70% of the time. You decrease position size. If you usually do 10 grand, you do 2 grand, and you use progressive exposure. You buy 2 grand. If that works, then you add a little bit, and then you add a little bit more, then you add a little bit more, either within that same stock or in your next trade. Okay, easy dollar environments. It's a lot more fun to talk about what to do in an easy dollar environment. Missing the good old days of 2020 right now. So you buy those breakouts, and you can put on a full position. Don't forget to do your stop, 10% or less, instead of these little rinky-dink partial positions. You can plan on holding for a longer gain in an easy dollar environment. Most stocks that break out with good fundamentals in the early stage base are going to move at least 20%. And you can selectively play for bigger moves. If a stock moves very fast, up 20 or 25%, hold it until it breaks its 50-day exponential moving average. You might be able to stay in it for months, maybe even years. And consider using margin to amplify your gains. Expert traders only. This works both ways. You can lose money a ton faster, or you can make money a ton faster. Now, the last few minutes here, let me show you some examples. First, I should have written easy dollar on here. This is an classic example of an easy dollar stock move. This is Zoom, ZM, 2020. You got this nice shallow double bottom base, handle, breakout gap on big volume, and then look at this. Consolidates for a day, and then 1, 2, 3, 4, 5, 6, 7, 8, 9 up days and 2 down days. It never pulls back, gives you no reason to sell, and you could ride this thing. You could have ridden this thing for months for a triple digit gain. This is classic easy dollar environment stock performance, and dozens, if not hundreds of stocks did this in 2020 during the easy dollar environment. Okay, now this is classic hard penny environment. I've been watching Deere all year long, and it has given me fits, let me tell you. John Deere, DE. So here you've got a volatility contraction pattern, but it's a much messier base, and you've got a deeper cup. You've got a handle that is really sagging. Then you got a breakout that failed, that squatted intraday, and then look at this wicked crash. 1, 2, 3, 4, I don't know, 10 down days. Then it forms up again, makes another really ugly handle, breaks out, volume's lackluster, follows through for half of a day, squats, churns, and then crashes again. 1, 2, 3, 4, 5, 7 days. Everybody gets shaken out here. And then it does it again. Look at that. And then finally it breaks out, but it goes up a measly 10%, not 20%. Now it's pulling back again, struggling to break out. This is an example of a really good stock with great fundamentals that is just getting beat up by the hard penny environment. And yeah, if you had bought this breakout, eventually you would have made money. But this is a bucking bronco. Who can ride this thing for this entire year? Has anybody who's been watching the stock every day been able to hold this thing all year long? Not me, I can tell you that. Okay, here's Arch Coal. Nice looking chart, nice looking symmetrical triangle that broke out with a vengeance today. I'm tempted to buy this tomorrow, but that's a side note. But here we are, January of 2022. The market was really weak. Nice looking base, right? Pretty decent little handle here, but it didn't tighten up quite enough. Then it tried to break out, squatted, failed intraday. Tried to break out, squatted, closed barely at a gain, and then crashed hard, probably shook everybody out, got support, and then it broke out again, went up one day, pulled back again, and now it's slowly working its way up. This is a very difficult breakout to hold through if you're being a disciplined trader, which you should be. That is indicative of a hard penny environment, and that's why it is so hard to make money in a hard penny environment. Lastly, AMP. So this stock is looking great, but this is an example of the wild volatility, the wild one-day shakeouts that wickedly shake out traders who have stops, which you should. So here, this is part of a longer base. So here you got this little base here. You've got churning and squatting, pulling back, and then this was a multi-month base, and you had this nice, pretty tight handle, nice breakout. Volume's lackluster though. I bought it right here, and then boom, huge, over 10% down day, shook me out and pretty much everyone else. And then it immediately comes back, starts working back up, but it's squatted, pulled back. This is a really hard handle and breakout to hold through. If you did, you got rewarded. But what you should do is get stopped out, but then you don't forget about it. You don't curse it and delete it from your list. You keep checking it every day. And some of these best winners you have to get into 3 or 4 times before it really sticks in a hard penny environment. So right now, the goal is just to break even. If you've broken even in 2022, or if you're down just a little bit, that is a win. And we are just trying to pick up pennies in front of that steamroller until the easy dollar environment starts. And then if we are disciplined, we are going to make a ton of money, you and me both. So you might be asking, well, why not just wait until that easy dollar environment starts? Because when it starts, the biggest winners are going to explode out of the gates, and they're not going to come back. And if you aren't razor sharp, you are going to miss those big winners, and then you're going to either have to take a big risk and buy them extended or let them go, neither of which you want to do. So really, we want to just keep whittling away, taking little stabs, taking little positions, little attempts, keep getting stopped out, trying to stay near break even, and then eventually some of these stocks are going to break out with a vengeance. I guess I'll say that again. And they're really going to go, and then all your hard work is going to be worthwhile. Let me know what you think about these concepts. And I appreciate you liking this video if you found it helpful. Take care, everybody. Have a good trading week.